Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Are you buying or selling a home? Having a realtor can make buying or selling real estate much easier. HomeGain can recommend and connect you with a top real estate agent in your area. Call 866-512-7918 or visit HomeGain.com. Did you know, according to a HomeGain nationwide survey, that having a realtor working for you improves your chances by 50% of getting your home sold? HomeGain can recommend and connect you with the top real estate agent in your area. Call 866-512-7918 or visit HomeGain.com.
You're listening to Real Estate Radio Washington, D.C. Metro with local expert Ryan Sloper. Now, here is Ryan.
Welcome back, Washington, D.C. Metro, to Ryan Sloper's Real Estate Radio, and I'm joined today by Louis Cammarosano, the General Manager of HomeGain. Quick reminder, Real Estate Radio is designed to build the Washington, D.C. Metro's market by giving you good free advice. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is 877-245-2030. That's 877-245-2030. So we're going to jump into HomeGain's Quarter 2 2011 Homes Value Survey. But before we do that, let's go ahead and run through what's on tap for this week. This segment is our Word on Wealth segment. It was brought to you by HomeGain. HomeGain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. So go to HomeGain.com today to see what I'm talking about. All you need to do is type in your home address, and you will get an instant free estimate of your home's value online. It's a great way to monitor your home's value, and it's totally free, so check it out today at HomeGain.com. So just a recap of last week, the big thing on Tuesday was the Producer Price Index came out, which is a measure of inflation, was very hot, and rates actually got worse because of this. They rebounded later in the week, so it was okay. But remember, inflation is the number one enemy of mortgage rates, and that the inflation is likely to continue as long as we continue to print money. Retail sales were better than expected, which was somewhat surprising. And Thursday, the jobless claims report came in. They fell by 16,000, so I guess it was a little bit of a better report than usual, but not too big there. Big thing on Friday was consumer sentiment. How do we feel about our economy? I mean, to be honest, I don't feel that great about it. I haven't really seen any indicators that are going to lead me to think anything other than we're just headed down a path of destruction. I mean, especially with what we're doing with our dollar. The University of Michigan reported that its overall index on consumer sentiment in the U.S. declined to a reading of 71.8 in June, compared to a reading of 74.3 posted in May. And the market had expected the consumer sentiment to basically go to a reading of somewhere around 74, but that was not the case. This week, we have the Fed meeting, like I had said earlier, that's going to be coming up, and which will actually have a conclusion. At the conclusion of that, Ben Bernanke will hold a press conference, basically probably going to say the interest rates are going to remain low through the rest of this year and into next year. QE2 is, for the most part, over officially at the end of the month, but most of the buying has already occurred anyway. I'm expecting continued questions about whether the Fed will do more easing. And at this point, any more easing that the Fed does is going to be wasted efforts and money. It's not going to solve the problems. Just throwing more money at a problem that's not really solvable at this point. Louis, you still on the line? I think we might have lost Louis. He dropped off. But anyway,
I'm here, Ryan.
Are you there, Louis? Okay. So I wanted to jump in because and I want to kind of throw your survey, which you just came out with, where you survey. I'll let you tell exactly how your survey is broken down, but then we have another article that just came back out from CNN Money that showed that housing expert Robert Schiller is expecting to see another price plunge of somewhere around 10 to 25% in the nation's home prices. And why I think it's interesting is because I think that what he's saying and the kind of the survey that you do, it's kind of interesting that it's kind of on the same wavelength. So give our listeners kind of the survey that you just completed for the 2011 second quarter home prices.
Sure, Ryan. I'll explain what HomeGain does. Every quarter, we survey about 2,000 to 3,000 homeowners, and we survey about 1,000 real estate agents across the country, and we ask them a series of questions about housing prices. And this quarter, The general sentiment, and one of the questions is perspective. Where do you see housing prices in the next 6 months? And this quarter, it's been the worst we've had since we started the survey in January of 2009, I believe. Half of the surveyed real estate professionals nationwide expect home prices to decrease over the next 6 months, and I think 43% of the homeowners believe the same. Then we break the survey down by region, and we break the survey down by individual state. You can find all the survey results on HomeGain.com. Just that's on the home page, look for the section called Home Values. But there's some significant differences, and of course, as you mentioned, in regions. In Virginia, because I think that's what we're most interested in, the D.C. metro area, 17% of real estate agents believe that homes will actually increase in their area. And in homeowners, I think it's 25% believe that home prices will increase. Now, nationally, those numbers are in single digits or closer to 10%.
Right.
So there is some optimism in the Virginia area that home prices will decrease. Then, of course, there's areas that are even more pessimistic. For example, in Illinois, 77% of the agents think that home prices will decrease in the next 6 months. And homeowners in Nevada, 63% think that home prices will decrease. Those are the top or the worst views on homeowners and real estate agents.
Yeah, that's incredible. I mean, those numbers are really high.
In New Jersey, 68% of agents think the prices will decrease. Ohio, 65%. On the homeowner side, in Ohio, 54% expect home prices to decrease. Florida, 52% of homeowners, and 50% of Illinois homeowners.
So, I mean, what I'm really taking away from this too, Lewis, is that really the majority of the country does have a negative consumer sentiment right now.
Absolutely. In fact, the quote I had in the press release was that the current survey reflects that real estate professionals resigned to accepting a market with declining prices being the norm rather than the exception. I mean, they've been beaten up for 2 or 3 years now, and generally, real estate agents are optimistic people. They're generally entrepreneurial, and they have hope for the future. But with respect to home prices, they're being much more realistic. That doesn't mean they can't do business, but they're not expecting their business to come from higher commission prices based on higher sales prices, but just doing more deals.
Yeah. And the other interesting part of your survey, you also show of the approval rating of the president. Isn't that correct?
The approval rating of the president, real estate agents haven't been fond of him for the entire time we've done the survey, rating from 60 to close to 80% disapproval rating. The homeowners are not as happy with him either, but not quite so unhappy as the real estate agents. And again, that ranges from state to state. So, for example, in Massachusetts, real estate agents give him a 60% approval rating. But then if you go to disapproval, in Nevada, it's a 90% disapproval rating amongst real estate agents, and 86% disapproval rating in North Carolina.
Have you noticed there's a big correlation there between the actual home prices, which way they're going, and or what the people?
There seems to be. There seems to be in areas. Well, you run across political lines in your. What are Republicans? Blue or red?
I believe it's red.
Okay, so in the blue states, the Democratic states, they tend to support the president more, obviously, and then in the Republican states, there is a greater disapproval. But where the economy is not doing well, I think Nevada's probably a toss-up state. The president doesn't do very well because the real estate market in Nevada is not doing well. Arizona, same thing. 75% of agents disapprove of the president, 69% of homeowners. But what's interesting, though, if you take it nationally, we've been doing this for a couple of years, and we compare it to the Rasmussen poll, the homeowners generally are pretty much in line with the general public or whatever Rasmussen calls the likely voter, and it's tending towards a greater disapproval than approval. And interestingly enough, the support that Obama seems to have that's strong is half of the disapproval ratings. For example, I think he has like a 22% strongly approve nationally, but a 40% strongly disapprove. When you add them up, he's close to 50-50, but the people that are strongly disapproving of the president are probably twice as many that are strongly approving. So his support isn't as strong as the people that are kind of focused against him.
Yeah. Yeah, that makes sense. So, I kind of want to get what your opinion is here. I mean, Robert Schiller is came out and saying that, he's worried that, this what's going on is really real and it's going to be a continued downturn like what happened in Japan. He said it had a boom in the 1980s and peaked in 1991, and prices declined in the major cities for 15 straight years after that. Are you under the impression that this is something that is very real and could happen here in the United States?
I think so, because we're not allowing the normal, we talk about this all the time, the normal market correction to take place. We're really trying to reheat the souffle when it really should have just collapsed and the chips should have fallen where they may. And, it's the Austrian economist's view that when you have the boom, it's large, that the bust needs to be equally as large for the economy to work itself out of its imbalances.
Right.
And we haven't really allowed that to happen. We're really struggling using monetary and fiscal policy to try to, you call it kick the can down the road, or trying to reheat the souffle, whatever you call it. It generally doesn't work, and we've seen that we spent $600 billion on QE2, and housing prices went down 8% during that time. And it cost us, I think, $860,000 per job created.
Right.
So what you really need for housing to succeed is you need natural market conditions where it makes sense to buy a house and where people have jobs and the country is producing and the country is saving. Otherwise, you're paying people to buy houses, or you're creating artificial incentives for them to get housing, and there's just too many houses on the market right now.
Yeah, and
it's not going to change.
Yeah, and Real Estate Radio Network, we're all about creating opportunities in the marketplace, and it's just amazing. We can sit here and I'm looking at these rates, and the average 30-year fix, like I said, is around 4.51 for into last week, and for a 15-year, it's 3.67 for a 5-year ARM. And what we're going to jump into actually in the next segment is kind of talking about the 5-year adjustable rate mortgage right now, Lewis, and why it's a great opportunity for somebody that understands that adjustable rate mortgage. That index is around, or for the average, is 3.07% right now.
Well, Ryan, here's the thing. You always point this out. There are opportunities in every market. People think that unless home prices are going up, there's no opportunity.
Yep, I know.
That is true.
Exactly, especially when you're able to lock in debt on your mortgage, which is basically going to be your biggest debt you're ever going to take out in your life at sub 5% interest rates. I mean, it's unbelievable to me that some people only want to focus on what their home value is going to do. Long term, if you hold your house, it's not supposed to be just about the investment. It's about what the neighborhood, moving your family into a great school district. I mean, there's so many good reasons for why you should own a home. But I'm going to talk about that great opportunity on the 5-year adjustable rate mortgage and what you can do as far as taking out that mortgage to really, help pay down your mortgage further if that's what you want to do, or take that money and save, because, I mean, we're all about buying a house and saving money at the same time. So when we come back, we're going to talk about the 5-year adjustable rate mortgage and why, as of 2011, it's the early leader in the actual refinance boom. So we'll talk about that. Thank you for listening to Real Estate Radio. Be right back.